So the key thing I can say is, I'd be looking for a Tesla reversal sometime in the next $120 range here, as well as sometime in the next 2 weeks here. And I would not be surprised if it's inside of this box and we have maybe one more candle before we start to pull back. Today I'm going to be doing an in-depth look at Tesla, a full technical analysis look over it to predict where our price is going next and where we might actually end up finding a peak. Now, if you're bullish on Tesla, you probably are hoping and thinking this will just go up forever, that there will be no dip downwards, that this company is worth so much more, any of these bullish thoughts. And I'll start off by telling you, I've had these same thoughts before. I traded Bitcoin back in 2017 when this thing was going up by $1,000 every day or even every hour, and I thought it was never going to pull back down. But just remember that every asset ever has always retraced. Nothing continues upwards forever without meaningful pullbacks. Even if you just look at our late 2019 move approaching into early 2020 when we were trying to get to $1,000. We made it all the way up to this $970 range and pulled back all the way back down to the 300s. So today I'm going to try and prepare you and plan you for when you might see that next large pullback. Whenever I open a brand new chart or have a chart open that doesn't have any technical analysis on it at all, I'm always starting with support and resistance. These are super simple to draw on an empty chart and are going to provide you so much value. So let's just start at the left side of the chart here and add some support and resistance lines. Tesla traded in this pretty tight range from the end of 2013 all the way through the end of 2019. So it's built up a bunch of support and resistance in this zone. Let's just outline a few of them. This first peak that we came to, once we draw a blue line, you can see how significant it is. We'll look at this peak up here, this peak up here, these peaks up here as well. And finally, since I can see that we came down and supported from this spot right here, we know that this acted as a strong support and resistance. As you can see, that'll be the last one I add in this kind of area over here. Let's expand back our chart now. And of course, these all look super tight in here, but they may end up providing valuable in the future. Now, I'm not saying Tesla is ever going to be at these prices again, but they're still helpful to have on the chart. Now, of course, let's dive into our major move that we had. Down here, starting from $180 all the way up to the $2,000 that Tesla now is. The first key resistance is, of course, these peaks up here that we have. Let's draw those in. And just looking during this first move that was approaching that $975 range, this kind of area right in here somewhere is good. We resisted it and then came down to support on it twice. And then the last one I like is this spot right here where we came up, and this was a huge rejection before our downwards move continued. Acted really nicely through this area. To find any support and resistance in this next spot, I'm zooming in just a little bit more. You can of course see that this zone right in here acted as resistance for quite a while before we broke through it. In here we have this support resistance line. We of course have this peak, which actually hasn't been used as support yet at all, but any major peaks we have are going to be resistance in the future. We've got this one inside of here as well, and that's about all I see for now. So let's take a quick zoom out here, and of course at this point we have a whole bunch of different lines on our chart. It starts to get a little bit too messy with too many of them on here. So what I actually like to do is go ahead and hide these lower ones. Since we kind of already came down, we're way off of these ones down here. I'm just going to right click them here and click hide. Now once you actually have these hidden, I think it cleans up the chart a little bit, and they're really easy to put back whenever you want to. All you need to do is right click, go to object tree, and then on the right hand side here you'll see everything you have hidden. You can just simply click the eye on all those resistances and supports and they'll come right back. Let's keep them hidden for now. The rest of these I'll leave on here while we continue to do the rest of our analysis. The next super easy thing I like to put on charts are just parallel channels. So we're going to grab our parallel channel tool and just see where we think it might actually be coming into play, where significant parallel channels might be. We'll start at the bottom again. So we have this bottom down here that I can see pretty clearly as the very low on our chart right now. I'm just going to click down there to start a parallel channel and then pull it over and make sure I catch the bottom of this move right here. And then let's just pull this up to what I see as the high up here. We're just going to be playing around with parallel channels to find geometry. So what we know is that when geometry is significant in the market, it'll actually continue to be significant over and over again. So our goal of throwing these on our chart is not to verify the past, it's actually to use these in the future. So once you have one on your chart, you want to see if it actually played well. Was it actually really good geometry? And the first thing I notice is that this move all down here actually came below this parallel channel. That's not really something you usually want to see, but I'll look forward for now just in case. So looking at just the bottom line of our channel, we of course have the 2 points that we connected intentionally, but nothing else touched. The same goes with the top of the channel here. We have no other touches, and even when we broke through it here, there was no resistance. So I'm already starting to lean against this parallel channel and look for a different one, but the last thing I check is the median line. Now you can see this move here does get halted briefly by the median line of this channel, and it acts as support a little bit through here, but this parallel channel overall is just not that significant, so I'll move on to looking for another one. We can try this other low down here that we have, a little more recent, and pull the channel, same spot there, same spot here, and again, without going too much into depth, I'm not really seeing any significance in this channel either. So let's stop trying to use these two pivots in something over here, and maybe look forward a bit. Keep in mind that filling a chart with technical analysis and finding the right look and patterns is not an easy task. It's not going to take you 2 to 3 minutes to finish a full chart and understand the significance of where it's going next. So let's try and draw a parallel channel using this peak up here and this low down here again, but maybe connecting to somewhere else. I'm going to click on the peak up here and try and pull it to this high up here, and then after that pull it back down to that low. Quickly, I'm seeing very little significance once again. So let's try the next peak we have, this one. So let's pull from here up to that high, down to this low once again. And now I'm starting to see something that I actually think looks good. Remember that we connected these two top points and pulled it to the bottom, and look how significant the bottom of this channel was every single time we came to it. This first move right off of it came to right here before a major move upwards. This sideways action ended up touching the channel once again before a major move upwards. And even the median line of it acted as resistance in this area for quite a while. So this is one that I actually really do like. I'm going to keep this one on my chart. I'm going to do the little trick again of hiding this for now, but we'll definitely come back to putting this parallel channel on. The last kind of one that I see standing out to me as a potential channel to draw is connecting this bottom here to this bottom here. These are basically our two major retracements. So up to here, all the way down to here, all the way up to 1800, down to here. I'm going to connect these two bottoms and just pull over to the top of this wick right here. So once we have that, you can see that maybe price is coming to the top of this channel right now. Is it going to be significant? Well, of course we won't know in hindsight. A really good sign of helping us would be to look at that median line again. Was it significant yet? So look at our first move up here from when we started down in this $937 range. The first time we found any sort of resistance before moving sideways for a couple days here was right at this median line. And once we ended up blowing through it, we came back down and spent even more time going sideways right on the median line again. So while it hasn't perfectly caught every single move, the median line has definitely been significant, and this is another channel I'll want to keep an eye on, especially as we approach the top of it right now. And even if we zoom into the last two candles here, you can see that both of them wicked just at the top of this channel. Of course, they're a couple dollars off here, but I haven't drawn the channel to perfection. Who knows if they'd actually be exactly on, but this is close enough anyways. Okay, so we have a bunch of support and resistance lines. We have a couple different channels that we like. Let's go ahead and hide the channel, clean up our chart, and start to look at the next tool I like to use for geometry help. And that's pitchforks. I'm going to do basically the exact same series of things with pitchforks that I did with my channels. So I'll start by using one down here again, pulling to this peak, down to here, and I'm going to make sure I have the original selected for now. And even with this first pull that we have here, you can see how significant the median line is all the way through this entire move. When we ended up breaking above here, we came back down, and the upper parallel supported us before moving upwards again. And the same thing happened in this spot when we came down as support before going back up. And once again in here, we broke a couple dollars below the line here, but then our continuation happened upwards afterwards. So without a doubt, this pitchfork is helping frame the geometry of the market. Of course, now we're way above where this pitchfork actually is holding the market inside of. So one thing I like to do is add new lines. So right now, a pitchfork by default uses the 0.5 and the 1. I like to start off by throwing the 1.5 and the 2 on my chart and see if that helps us continue great geometry and catch some of the major moves. So looking at the purple line here, you can see it's definitely resistance through these areas and support as well. And this upper 2.0 line absolutely acted as resistance. This channel tried to wick above it, came down below and closed right at that line before we moved downwards significantly. So I do believe that these lines are also helping frame our market. However, we still haven't quite looked at the top yet. So once again, I'm going to add a couple more lines to it. Let's go ahead and add the 2.5 here. and the 3.0 here. Now, obviously we haven't had enough price action in these spots to really know if these are going to be significant or not, but since this pitchfork was so significant through here, it's something that I'm going to keep on my chart as well. Of course, I'm not going to leave it like this. That creates too much of a mess. I'm going to go ahead and hide this once again. Once I go through all of this technical analysis, you'll see what I'm doing with these tools that are hidden. To give you a sneak peek, I'm going to end up putting all of them back on my chart and look for zones of confluence, basically agreements in all of these spots. And hiding is extra important for this because you know that you're not biasing yourself towards drawing new things. I can't remember exactly where the parallel channel ended up finishing besides the one that I know finished right here, but I know we had another one coming up in this area somewhere, so where that parallel channel ends up intersecting with this line up here may be a nice spot of confluence, for example. But anyways, more on that to come. Let's hide this pitchfork for now and see if we can find another one that fits the boundaries of our market without having to extend it so far. So the next pitchfork pull I'm going to do is just from this low into here, this high up here, and then the next low down here. And let's go ahead and change this template back. So the first clear thing here is that this one's actually holding the market. We haven't broken above it yet. However, this median line hasn't really done anything. When the price came to it, we kind of just went right through it. We did go sideways when we were above it here, but I really don't like the look of this one. There's no significance yet of this pitchfork in the market, so there's nothing for us to rely on. When this happens, I'll also just check other types of pitchforks. So I'll throw on the shift pitchfork real quick, and I actually do like how the median line rejected this or held it sideways before breaking through here, but the upper parallel didn't really do its job on the shift here. We kind of went right through it. Yeah, we had the small candle that came back down and touched it, but there isn't a ton of significance in this one either. I'll scroll through to the modified shift, and again, median line doesn't do much here. We also know that a modified shift pitchfork is really just a channel, so that channel we had connecting these pivots earlier is going to be the same thing, so we don't need this one on the chart. I'll check maybe one or two more spots of pitchforks and see if we can find a really good one that frames the market. The next pivots that kind of come to mind to me are either in this low somewhere or maybe this low that we have. I'm going to start on the left hand one here and pull from there to this peak down to here, and this one definitely could be significant. Something I like to do sometimes when I see that things are a little bit off is make sure I actually have these on the pivots, which is hard to see when zoomed out. So I'll grab this magnifier and actually just zoom in here and make sure we've got it directly on there, because small tweaks in that can actually make huge differences. And I'll do that for all three of these pivots. Okay, and now you can see that this candle right here that had its rejection was right before the median line here. We didn't go downwards, but it did cause us to go sideways a bit. This next green candle tried to break out, got caught by the median line as well, sideways a little longer at this median line, and now we're kind of hovering right above it in no man's land up here. So I do kind of like the look of this one. It's hard to tell so far, but it's definitely something I would keep an eye on. Something I would do also is kind of wiggle this. So if you just look at these two pivots down here, while I'm sitting on this one currently, sometimes using the candle just to the right of it, the last candle that's red before we gap upwards, might help just a little bit in framing the geometry. So I'll move it over to that, and after doing that, you can see that this candle actually touches the median line to the wick there. So I think that this geometry is a little bit better. And as I was saying earlier, I like this low in here as well. I'm going to do the same thing with just wiggling this over a bit, trying to figure out, again, which pivots are the most significant and which ones are actually causing geometry in the market right now. I know that this is all hindsight, but our goal is to use this hindsight data to predict the next move. So let's move this over and check how this one's framing the market. Playing with this pivot in here, or maybe even further to the right, it's definitely possible that these come into play. However, we haven't seen too much yet. There's a chance that this pitchfork is actually going to be predicting the top of our move in here. So this is one I'm going to hide for now, and I'm also going to put that other one back on. We don't really know which one's going to be best, so for now we'll leave it like that. The last thing I'm going to check with these pitchforks is the other types, so the shift pitchfork specifically. I'm going to toggle this on, and I don't really see any significance off the bat on this one. Pull it over, maybe check the other pivot here, and this one's super interesting as well. Look at that. The top line here is catching the top of our move right as we speak. I don't like how we blew through the median line without any stop on it. This green dotted line had a little bit of resistance, pushed us sideways before we had to break out of it, but overall, I like the original better on this one as well. So let's go back to it, and since we already saved this one, let's go back here and hide this one as well. So just a couple more tools to go. The next thing I look at are Fibonacci retracements and extensions. Now, just so you know that I'm not cherry picking this on the Tesla chart here, I want to go to Apple and show you an example of a really key Fibonacci retracement. So I'm a bit zoomed out on this Apple chart, and I'm just going to pull a fib retracement from the low we have back in early 2019 here to the high all the way up here, and just pull it over. And I'm using this example because it's a perfect 618 tap. This is exactly where we like to look for fib retracements to come to. Now when we're in price extensions like we are with Apple right now, and we are with Tesla, where we're trying to find the top of a new move, an all-time high, obviously the positive values of fib retracements aren't going to work because we're above the top spot there. That's where the negative retracements come into play, or you could also use the Fibonacci extension tool for this. However, I think the Fibonacci retracement's a little bit easier because you get both pieces of data in one. You can see where we retraced to, and if it's significant, it has some trust forward going to the negative numbers. One of the absolute best trades pointed out to me by another YouTuber named Trade Devils is to look for retracements to this 618 as we've done here, and then look for it to come up to this negative 0.236, which I have in green. If you play around with this on your own, you'll see just how significant this move is in the market and how often it really happens. So let's take a look. We came down to that and we started going upwards. Once we're in this area, we're trying to figure out where are we going to find the next retracement. The negative 0.236 would definitely be the first place I'm looking. And if we just zoom into that a little bit here, you can see that Apple came up to that almost to the penny before having a $20 dip downwards. So obviously this negative retracement value was significant. The second value on the negative side I look for is the negative 0.618. It's just this 6.8 that we love to look for, but on the negative side. And even looking at that in Apple here, you can see that we did have some resistance in this area. It didn't cause a major move, but it was at least slightly significant. And the third and final spot that I like to look for is the negative 100. It's basically as if you took the price history of this move and just copy pasted it on top of itself. This is another really common zone for a retracement, and perhaps Apple's going to go up there and have a reaction. But anyways, let's go back to Tesla and take a look at that. So we'll get into pulling retracements of all of these moves in our final thing that we're going to use, which is Elliott Wave. But for now, I'm just going to try and look at these negative values and see if we're coming up to any significant ones. I'm going to pull from our low all the way down here, pull it to the peak here, and let's just look at these values. Negative 236 was completely blown through here, negative 618 same, but here the negative 1 was extremely significant. I mean, look at that. We wicked up a little bit past it, but afterwards we ended up dropping over $350, $400 downwards. Now, of course, we've already gone past this, so let's switch over to another retracement pull and just pull from our new low down here to our new high up here. So while any Fibonacci retracement pulls can be valid, I like to see that we've actually come down and touched one of our major values here in order to kind of help validate the pull that we've done. There are so many different places you can pull from, just like with Pitchforks, how we could draw from tons of different pivots, but we're looking for significant spots that have already happened to prove out future happenings. So let's play around with the bottom pivot here and maybe move it up to one of these other ones to see if we can get this retracement to come down to a significant value in order to validate the move upwards. So I'm just going to move this up one pivot to this one right here, and you see we're still pretty short there. Let's go up even one more pivot, and now you can see this move comes down to the 382 exactly to the dollar. So this is definitely a pull I'd be keeping an eye on, and especially this negative 236 line here that we're actually just a couple dollars over right now, so that I don't have to keep a bunch of different fib retracement pulls on my chart, which gets messy really quick. I'm actually just going to put another support and resistance line up there, and I'll go ahead and change the color of it so that I know what I'm looking at in the future. I'll just make it a red dotted line. So now let's keep moving this up and see if this comes to another significant pull that we might have. Just going to keep moving this up pivots, and actually this pivot low right in here, zoom into that one that we're pulling from just before a major move upwards, that comes up and retraces to the 50 right on, which is a great retracement spot to look for. Now if we just look at the 236 on this, we did come to it and slow down a little bit for one 4-hour candle in here, but we've already gapped above it. So this next 618 would be the spot I'm looking for on this retracement pull. So I'll pull this just one more pivot up, even though it looks like it's going to be too deep. We've already kind of gone through the 786 here. Didn't really use any of these significant ones down here. However, looking at the upside, you can see that this pull right here, from this low up to here, even though it wasn't significant on the downside, look where our first resistance spot was, where we actually went sideways, right at the 236 there. And then look where we are right now. We're right at this negative 618. So maybe the same thing happens and we go sideways here before move upwards. Or maybe it's actually a full-on resistance and this is another peak in here. I'm going to draw this one in because I think it might be significant as it was back in here. Okay, we've gone through a whole bunch of different tools. We've put a bunch of different things on our chart and hid them. If you're still sticking with me, we just have one more to go before we get to the actual results of all of this. The last and final thing I'll put on my chart is Elliott Wave. Now, if you've watched any of my previous videos, and I have a 9-part series as of now on Elliott Wave theory, you'll know that I believe this is the absolute best tool for forecasting the future, and I would highly recommend you check it out and learn it. So before I move forward with this, if you have been watching my Elliott Wave theory videos, I would highly recommend you pull up the Tesla chart here and see if you can put just a rough count on this. Maybe just spend a couple of minutes and see what your count comes to. It doesn't have to be perfect, and it can be at this zoomed out scale. The Elliott Wave look of this is actually pretty textbook. It's really clear to see and a really good beginner example, most definitely. Okay, so let's continue forward. The first thing I'm going to do here, as I didn't do before, is just hide these red lines I've drawn. I want to keep my chart as clean as possible, leave as little bias as possible for my Elliott Wave analysis. So the first thing I see when looking at this chart is that it's a very clear 5-wave structure. I don't know where to start the count from, and I don't think it really matters that much, but let's place mark it into here right now. We can figure out where a better pivot might actually be in the future with some fib pulls. We have our major move up here, our 1-wave, before a huge correction, our bottom down here, our 2-wave. We just kind of continue upwards significantly until all the way up here before we have a huge pullback, our 4-wave down here, and now we're kind of in that 5th and final leg. Again, I don't know where this 5th is going to fall as of right now, so I'm just place marking it up here. We'll move it next. So it's hard to argue that this looks anything other than a 5-wave structure, at least as of now. But just to prove the point, we're going to go ahead and validate the previous waves just a little bit, and this will also help us figure out where we might go to next. The first thing I'll do is pull a fib pull from the bottom of our 1 to the top of our 1. And remember that our 50 or 618 are our most common zones for this, but still a percentage of the time, maybe 15 or so, we come as deep as the 786 or as shallow as the 38%. So let's go ahead with this pull, and I'll just use the absolute lows down here and pull it to the top of the 1. I'm going to remove some of these negative values just to keep my chart clean in here. So I'm going to drop off the negative 618 and the negative 1 again. I like to keep this green one in here. And as you can see from this first pull, we actually come to the 786 right on, just to the penny here. So I actually think I've got this pivot correct in that the low is down here. If we were to pull from any of these other pivots, you can see they're just not as significant on that retracement as this one is down here. So let's use this as our very lows, and I think this is a really good validation of a 1-2. When something touches a fib just perfectly like this, it's a really good sign that you're moving in the right direction. So next up, let's validate our 3rd wave. We know that the most common zone for a 3rd wave to fall is in that 1.68 to 1.75 extension range with our trend-based fib extension tool. So I'll pull again from our bottom there to the top of our 1, click at the bottom of our 2 and pull it over, and this is the range I'm talking about, 1.68 to 1.75. And again, this 3rd is almost perfectly falling inside of this. Sure, we have a wick that comes up above it here, but the candle ends up closing just inside of this box we look for before our next huge pullback, right where our 3rd wave is labeled. This is the second really good sign that we have our 1, 2, 3 correct. So once we had the 1, 2, and 3 in place, we'd look to find the 4 with some channeling techniques. What we would do is we'd pull a channel from the top of the 1 here to the top of the 3 here, and I know that we did this earlier when looking for parallel channels, but now we're doing it in terms of Elliott Wave, where we have exact pivots that we need to use. So 1 to the 3, pull down to the 2, and we'd be actually looking for the 4 to come to the bottom of this channel. Let's extend it sideways here a bit, and you can see that that does not happen. Now in an extremely bullish market, it's not surprising that the 4 didn't come all the way back down to here. We had to move from $340 all the way up to $1,800, and we pulled back down into this $1,370 range. The market was extremely bullish, so yeah, our 4th didn't come down to this channel and wasn't as deep as we'd expect. But this happens sometimes and it's totally okay. So once we have our 4th in, we would want to validate it with a fib retracement pull from the bottom of our 2 to the top of our 3. And for a 4th wave, we're looking for that 38 to 50 spot as our most common retracement. However, the 236 does happen for a 4 as well, especially in a bullish market. So let's tag that one on here, and we do end up coming down to this 236 and using it as support for a while, but ultimately we retrace somewhere in this range. Again, this isn't the most common range, and we would have loved to come down to that channel right around this 38 or this 50. However, I think it's pretty difficult to argue that this is not the bottom of our fourth wave looking at the move that's already come in. It would have definitely been hard in hindsight though to know that this was the fourth wave versus the very clear peak we had in the third wave with our fib extension. So we've done a quick validation of our 1, 2, 3, 4, and it looks just like a textbook Elliott wave. So let's leave it for now and try and figure out where we might go for the fifth wave. For this, there are two different things I use. First off, we're going to go with some parallel channels. Once again, these are used in Elliott Wave, but with clear defined pivots. To project out a fifth, we pull from the bottom of our 2 to the bottom of our 4 here, and then we typically pull to the top of the third wave here. If the third is too extended, we can use the top of our 1. However, this third is not too extended. It actually falls right into our guideline. So this is the channel I would absolutely look at for Elliott Wave. And more often than not, the fifth wave is caught right at the top of the channel, and you can see that our price is actually there right now. If we were to be seeing high volume spikes in our fifth wave here, it would signify that a throw over of this channel is very likely, but just looking at volume was highest in our third wave peak here and has not yet reached levels of that in our fifth wave. So I would definitely be looking at the top of this channel as the possible fifth wave. The second way to validate the length of the fifth wave is to look at the length of the 1 wave. In Elliott Wave, there's a guideline stating that the 1 wave and the 5 wave are often equal in value. And a secondary pull you can do with a fib extension in Elliott Wave is to pull from the bottom of the 1, or the start of your move, up to the top of the third wave down to the fourth wave. I'll start with the first of those because the rest of this is pretty textbook, whereas you'd use that second example when the third wave is super extended, or the first wave is super extended. So let's pull from the bottom of our 1 to the top of our 1, which gives us the length of our 1 wave, and then put it at the bottom of the 4 wave here. This pink line is our 1.0, which would signify a move of our 1 wave exactly equal to the fifth wave length, and it's the most common spot we'd look. So once I had both of those on the chart, I'd be looking for our intersection of those. You can see that's right up here. I'll put a box around it, and if price were to come exactly into this, touch the top of our channel as it touches this 1.0, that would be a very significant spot I'd be looking at. Of course, things aren't always that perfect, but when they are, that would be a short that I would definitely take. Now just to check it, I'll take that other pull as well, and I'll move this from the top of the 1 here to the top of the 3 here, and still leave to the bottom of the 4. So this would be our entire move from 0 to the top of the 3 relative to the length of the fifth here, and the 618 is a good target to look for this. So just so that we have it, I'll put another red line up there as a potential target. Alright, if you're still with me, then take a deep breath because we've made it through all of the analysis that I do when I open a chart and try to figure out where our long-term trend might end. The only thing left to do is to find actual confluence in all of these spots. Now because Elliott Wave is my favorite tool and I trust this channel more than any other channel I might have drawn, I'm going to go ahead and change the color of this one so that I know in the future which one I'm looking at. Let's make this a blue color and make the median line a blue color as well. And now let's go back into our object tree, put everything back on, and look for some confluence. We already have one confluence zone marked from our Elliott Wave alone. Let's see how that plays in. So let's start by just toggling kind of one of these at a time and see what kind of areas we can see in some sort of confluence with our Elliott Wave. I'll put this pitchfork back on and look at that. I had no idea that this median line we drew earlier was going to come right through the middle of our confluence box right in here. I promise you I did not cherry pick any of this, and it's all been live analysis, and that just strengthens this box in here even more. So we know that this confluence box is going to be really important. We can even make it smaller in here because we know that each of these points are just right on that area. I'm going to toggle this pitchfork off so we can look at the other one, and this one doesn't look too bad either. We see that this pitchfork and this channel are crossing right in this area right here, and we're a little bit to the right of it, so I'm just going to extend this just a little bit. Maybe we come up above the channel and touch this median line, but it's definitely a good area to have in mind. This one's still my favorite for now, but I'll have this just in case. Let's turn this pitchfork off and go to our final one that we might have drawn, and we're looking at this blue line up here. You can see that it crosses our darker blue channel here, right in this zone right here, just outside of our confluence box that we originally drew. So I'm going to expand this just a little bit to include that cross in there by a couple of days. That helps build this area as a key spot. And let's toggle this pitchfork off, put this parallel channel on, and we actually already had this parallel channel drawn because it's our Elliott Wave parallel channel. So I'm going to go ahead and delete this one. It's just an extra duplicate. Toggle our other parallel channel, This one doesn't really intersect much, and you can see it's not really going to. I'm going to take this one off and delete it from my object tree. And I already have all these red lines on, and you can see that they actually play really well into this first confluence zone here, helping build this as a potential reversal spot. None of these other targets really fall into this box here. I'm still going to keep these on my chart because they're clean enough and simple enough, but it doesn't change any of the confluence zones I'm looking for. So now, just to clean this up even more, let's get rid of our parallel channel. We know the two spots that it's going to intersect with other areas by our boxes, and I don't have a strong bias towards one or other of these channels. I think they're both potential reversal zones, either in this range right here that we're in from 2030 to 2120, or from the start of that from 2130 up until 2200. So the key thing I can say is I'd be looking for a Tesla reversal sometime in the next $120 range here, as well as sometime in the next 2 weeks here. And I would not be surprised if it's inside of this box and we have maybe one more candle before we start to pull back. So we have some final price predictions in. The last step, where are we going to retrace to? Well, once we have a 5-wave move, we're looking for a full retracement. This would be a 1 on a larger scale, and we'd be looking for another 2, just like this one was. We know that our common spots of a retracement are the 50 or the 618, but let's just pull a fib retracement and look. I'm going to pull this to the very peak, but no matter which spot you put it at, our possible retracement zones aren't changing by too much. So let's put it up here and just look at where we might retrace to. Again, we know that the 50 and the 618 are the most common zones. Now you might be looking at this and thinking there's absolutely no way we're coming down to this area right here, either $1,200 or even down below $1,000 on Tesla. However, these are the most common zones. It would not be that crazy. And you can see that these two support and resistance lines drawn actually fall into this box nicely. If we were to drop below here, there really isn't any support till all the way down here. So I'm going to move this box and just decrease the size of it because I don't believe that we'd fall anywhere in this area before a retracement. We almost always fall to a previous support or resistance zone. So this is the first box I'm going to draw. The second thing we know is that retracements like to come to the bottom of where the 4th wave ended up falling before, which is in this area right here. And we actually should have a support in there as well because of course we supported it here and here. And as I said at the beginning of the video, neither a 786 retracement as we saw with the first 1-2 or a 38% retracement are too rare to happen. They both happen around 15% of the time. So the second prediction I would have on Tesla would be for us to fall in the range of this 4th as one of the guideline states, and also the range of this 38 and these two support lines in here. Anything above this would be a crazy low percentage retracement happening. We almost never see a 2-wave that retraces less than 38%, so predicting anything in this area would be just too bullish and not really trusting the chart. So let's take our retracement off and get a final look at what we're saying here. In the bullish situation, I see Tesla coming up to this $2,200 range and then retracing down to $1,400. In my eyes, that's the most bullish situation that can happen for this stock. And in the bearish situation, we might retrace right now or come up a little bit more, but come all the way back down to $1,000 or even dip back down below that $1,000 range into the mid 900s. That would not be crazy and definitely is a possibility. Now there are two final things I want to leave you with. The first is that this retracement isn't likely to happen just in a single day or even a single week. The price is probably going to slowly come downwards over time and might end up taking quite a while for us to reach that, even a couple months or even a year. I mean, it took us from the end of 2019 all the way through now to put in the price we already have. To take something like half that amount of time to put in our full retracement would not be uncommon. The second thing I want to leave you with, and this one's super important, is that this could all definitely be wrong. Keep in mind that technical analysis is really just a game of probabilities. We're never really too sure about anything, because if we were, well, I think you know what would happen. We would all just immediately be millionaires if something was guaranteed to make us money. It's possible that Tesla continues upwards to $2,300, $2,500, $3,000 before a major pullback. However, one thing I'll speak in confidence on is that at some point this stock is going to pull back, and that 50% retracement of whatever move we put in is the most likely number. So there you have it. We've put in a ton of work to look at Tesla, get a full price history look at it, and figure out where we might be headed next. If you've made it this far, thank you so much for sticking with me through this video, and if you did like this content, please leave me a like and let me know in the comments below. And of course, if you want to see similar content in the future, please click that subscribe button. It helps me out a ton, and I really do appreciate your support.